Hi, it's Lee, and welcome to the Tesla Economist. I thought we could just talk about what's going on with the stock price lately. Last time we had a lot of doom and gloom to face, accompanied with additional FUD about Tesla. I was working full time to debunk all that FUD and actually going overtime trying to work out what the demand issues Tesla may be facing in China. As you may recall, I said that Tesla could simply lower their prices to 299,000 yuan and then meet the threshold for the subsidy for the rear-wheel drive Model Y, and then all that demand would return. I also said that in addition to that, the news is already out to consumers that there could be potential price drop, which will in turn prevent people from ordering as they want to wait and see. Especially Chinese consumers. They are astute price shoppers and not wanting to overpay. Thus, in turn, meaning there is also pent-up demand in addition to lower demand due to the economic situation in China, but also the increased supply due to Tesla ramping up in China. And I called it. That was exactly the price that Tesla lowered the Model Y to in China. It was only a 5% drop in price, yet an 8.5% lower price to the consumer when you include the subsidy. And demand came back in droves. And as we also heard, so much so that it actually crashed the website. And we'd assume that Tesla would have some fairly substantial servers. And then we did some maths and we estimated that this would only impact earnings about $150 million less per quarter due to this lower price. However, I also estimate that earnings will be up about 30% from Q3 from all these vehicles in China due to this insane ramping. 30% or so increase in vehicles ends up at about 30% more earnings, as despite the lower price, we not only have a lower OPEX per vehicle due to economies of scale, but the cost of goods sold per vehicle would have also reduced, as in due to the ramping, Tesla can now make Model Ys and Model 3s for a lower cost than before. This is fine. Like I said at the time, this is not a big deal and no reason for the stock to overreact and drop as much as it had. But we had analysts saying that it was going to drop even further, and of course Tesla Q and Tesla Bears who think they know the stock so well and love telling you how they told you so, and that Teslas don't have unlimited demand. No one wants to buy a luxury SUV in a recession, and all sorts of things. Even traders and chartists trying to tell us things like, well, what we have here is your classic head and shoulders chart, so the stock will keep dropping. The audacity of even saying they predict the stock to hit $120 or $140, then instilling fear in the weaker investors too scared to potentially lose that much money, whereas I clearly outlined that it would be an absolutely ridiculous price when you compare it to Q4 earnings, and it would be a P ratio of something like 17. Not going to happen. Although, admittedly, it did pop below 200, which I didn't expect either. None of these analysts or traders have crystal balls to see the future of the stock price. Some of them may have even been right several times in the past, or at least told you they were right. But that doesn't make any difference. In investing, there's a scenario people say. If you have a room of 100 people, each of them flipping a coin, and everyone stands up. If you flip a tail, you sit down. After 6 or 7 flips, there are still some people standing, meaning they got heads 6 or 7 times in a row. But every time they flip, their odds are no different, despite how many successes they've had in the past. And then the big boys use quants to levels of intelligence we can't even imagine, and they still get it wrong, or they simply manipulate the stock. Anyone trying to give you short-term future predictions of the stock price is dangerous to listen to, especially when they don't even study Tesla full-time, but likely follow several other stocks. The fanboys who love this company can't help but study it full-time. It's their passion. The analysts, it's just their paycheck. Although a lot of the fanboys have substantially higher paychecks than any so-called analysts. But the likes of these analysts still spook the market. They have the authority and it spreads. Negativity was coming from all areas, like estimates of only 400,000 vehicles for Q4. Nonsense. But trying not to let it all affect you is very tough, especially when the stock price is falling too. And like I said, I didn't anticipate it to hit 200 either. I woke up one morning and saw it at 240 and bought 3 2025 Leaps contracts all at once. In hindsight, I probably should have just bought one, but I couldn't believe the price and didn't want to miss out. And if by 2025 Tesla have 4680s and a new EV platform at half the cost of a Model 3, then whether I bought it at $240 or $200 is all negligible difference compared to what the stock price will be then. Right, but it wasn't just all that. We had all the concerns that Elon was going to have to sell billions of dollars more to fund Twitter. And as we've seen in the past, when Elon starts selling Tesla stock, it starts dropping rapidly. So the stock was being punished for that too. Yet we appear to be out of the woods on this front. There were no more sales of Tesla stock from Elon. But if he had to sell, he had to. I believe in what Elon is doing with Twitter is for the best. If it meant the stock dropped a little just in the meantime, then it was just going to be temporary. But he didn't sell. And now he does have Twitter, which is going to be really exciting. There is a lot of potential on that platform. It is unbelievably basic as to what it is now. A dozen good coders could make something a lot better than the existing platform. So imagine what Elon can do. Of course, this anti-Tesla rhetoric was saying that Tesla would need to do a buyback to support Elon selling too. I did a video on the advantages and disadvantages of a buyback, and judging by the comments, I felt the majority of you didn't really want it and thought the money could be best used elsewhere. I explained though that Tesla do not need this money at all for any future capital expenditure. Their growth costs very little relative to their earnings. Why? Because they build factories that get over 10 times return on asset. Each factory could fund 10 more factories every year, to put it into perspective. That's crazy. And as the stock was down, I was keen to own a bit more of Tesla too. Even if it's only 1 or 2% more, it makes a difference. And it likely won't be the last of the buybacks they do. Elon has said that Tesla will never offer dividends in the past, so perhaps there will be more buybacks. Buybacks are good for a company's stock price, but not necessarily so great for the overall economy, as the funds could be used to invest into economic growth. And I said that I would expect a buyback to be around $10 billion. And then on the earnings call, we hear that Tesla are likely going to do a buyback at around $5 to $10 billion. They didn't say when exactly, but one might think they would do it whilst the stock is low. We saw just how much Elon selling $5 to $10 billion affected the stock price. If that is some indication, then perhaps we might expect the inverse effect on when Tesla purchases that much back. Next year, there is a 1% tax on buybacks too, so I would expect Tesla to do their buybacks this quarter, perhaps soon. So I'm happy about the buyback, as I can't really stretch myself to buy any more shares at the moment, so at least Tesla can buy some for me at these low prices. One of the other overhanging concerns investors had was also the energy situation in Germany, but Elon said that they do not foresee this to be a problem, so we shouldn't have to worry about this affecting the stock price either now. And even if it was a problem, Tesla have taken precautions for just in case anyway. Then there is the overall economy, the macro issues that people love to tell me I shouldn't be so excited about Tesla because we're in a recession. But this isn't my first recession, and I wasn't planning on selling my stock in the next few years anyway. And yes, the PE ratio has been savagely compressed, but we're still expecting at least 50% growth year over year, which has not been factored into the stock price. And this is a 50% increase in production for just vehicles year over year. We expect a lot more from energy and other areas. And as I love explaining the economies of scale of when this growth in vehicles occurs, it means a lot more than 50% growth in earnings. More like 80% initially at least, and possibly more if the growth is with vehicles that have 4680 cells, which carry about twice as much profit compared to the average vehicle made in China. Anyway, through this stock dropping period, no fundamentals changed with the business, which was the main point I was trying to stress to people. Yet we have the same stock price from nearly 2 years ago, despite substantial growth through a pandemic. It seemed like a massive overreaction to me, combined with all the FUD I mentioned, and people were telling me I shouldn't be debunking this. The stock is going to crash. Don't encourage people to buy the dip. Well, I never did say buy the dip, and I never said to hold. In fact, I even said if you need the money to make your mortgage or pay for food, then it's understandable if you have to sell some stock. All I was doing is trying to offer some perspective out of the downward spiral of negativity that we were facing. Anyway, the fundamentals have not changed, and we're still awaiting that the high volume production for the 4680s until the stock price can really level up again. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.